everyone. Welcome to the Stock Market Morning Prep video for Tuesday, April 29th. Lots of volatility, and the intraday volatility continues. Dow Jones up 87, Nasdaq down $1, and that was the help of Apple. I think if Apple did not do that buyback and a split, I think Nasdaq would really be in serious trouble, and that's held up because of Apple. It's heavily weighted in the Nasdaq. S&P up only 6, and a Russell down 5, down almost 6 points. So definitely a mixed bag here. I wouldn't read too much into yesterday's price movement. Now, we are up in the pre-market session, up about 6.5 handles in the ES. I still think that the markets are vulnerable to some downside price action. We have FOMC meeting today and tomorrow. Tomorrow they'll come out with their statement. And then we have, of course, our non-farm payroll numbers that come out at 8:30 Eastern Time in the U.S. on Friday. So there's a lot of risk events that are going to be ahead of us. Also, we also have to deal with geopolitical risk events as well. And yesterday was exactly the tale. We had a gap up. We sold off for the first half hour. We rallied back up to only sell off, make new lows intraday. And then news came out saying that Russia removed its troops again, and they went back to their base, and the markets rallied again. I mean, so it's an insane price action. No reason for this type of volatility, but the volatility continues. And as traders, we need to change and maybe possibly adapt to what's going on intraday. So, for instance, if the volatility is too much that you're not making any money or a little nervous, take a step back a little bit. Remember, cash is a position, so and that's what I always like to do as well. And with this crazy price action, unless you're a scalper, it's not good for intraday swing traders like myself. I like to pick a trend and then kind of build a position or hold it for as long as I can before I get stopped out. And in this case, it's got to be within minutes because you're getting stopped out immediately, just about. So anyway, I wanted to get into the trend. And I borrowed this from StockCharts.com. It was a great insight of really what's happening. And you could see utilities, energy, staples, all defensive, retailers, consumers, discretionary. And, of course, they don't have it here, but they have the higher beta names, the NASDAQ stocks. All of them are down here in this area. And look what's happening. Money's flowing into this safe haven. So I wanted to just to show you that it might look a little rosy outside, but if you look under the hood, things don't look too good. And I do suspect, as of right now, based on the analysis, that we still see some further downside. Now, obviously, news trumps the charts. Janet Yellen, the Fed chair, could say anything tomorrow and add new liquidity into the market, new renowned buying, and the markets actually rally. So, just keep that in mind. But from what I look at, based on the analysis here, markets don't look too healthy. And if you could see here's the NASDAQ stocks above the 50-day moving average on NASDAQ. This does not look healthy at all. So I'm looking for probably some further downside before we get a bounce in the NASDAQ. Now remember, obviously Apple is heavily weighted in NASDAQ, so that could hold the index up. So just use a word of caution if you're looking to short that. But a lot of the high beta names, all of the leaders are now lower. Probably a third lower off their highs. The NASDAQ stocks like the LinkedIn's, the Googles, the Baidu, which Baidu actually is acting pretty well. You have other areas in tech, aside from Apple, that are really getting decimated. All the cloud computing stocks. So you got to use a word of caution, especially when tech is not following and not leading. That's the big thing. It's just leading everything else lower. Take a look at the stocks above the 50-day moving average. Again, making lower lows and lower highs. That's not what I want to see. That's the big no-no, especially when you're looking at indicators and you're saying, well, wait a minute, we're at extensions again, but stocks aren't, so it's really just based on the index, and that's not a good thing when the index is up, but stocks are not supporting the rally. That's a bad sign here. VIX, and also VIX at the lows. VIX here sitting on support here. You can see the Bollinger Bands here starting to tighten again. So I'd be looking for a bigger move to the upside yet again in the VIX. That would put pressure on equities. Now, if you look at the U.S. dollar, I showed this to you last time. We have a big head and shoulders pattern here. Now, 79 is very big support. It's not gonna be easily to break down from here. But if it does break down, that'll put a bid on equities. commodities, on commodity-related stocks, and also will affect equities as well. All right, so let's go right into the index. I'm doing indexes today. Not much has happened in the last couple of days, other than, of course, we had some movement in Apple, which kind of buoyed the Nasdaq for the last since Friday and yesterday. Um, Japanese yen spot, as you can see, we have this ascending triangle. Yes, we did break below it, but what do we have here? We have an inverted head and shoulders pattern, which is bullish, but it's only bullish if we break this neckline up at 98.88. So you got to keep that in mind. But it could easily break down, and that would obviously put a bid into equities. So we still have this pattern. We're still bullish, but basically clinging to it right now. So if we get down to the head, then it's going to be negated. This pattern will be negated. But remember, it's still bullish here, so I wouldn't get too closely bearish, if you will, on this sector on equities at right now, because if the stocks are well, let's put it this way: if the yen breaks down, then stocks will get will put a bid in stocks. But again, we do have a bearish pattern here, and even if it broke down a little bit and came back up above it and start to break up to the upside, then you'll see some further downside in equities. All right, just keep that in mind. We do have that bullish pattern, but again, it's only bullish if we break the neckline. Now let's take a look at the dollar, and I just showed that bigger picture of the dollar. Here's a closer of the dollar index, and again, we have this big band of support, so it's going to hold it. But you can see that what's happening is the dollar's making lower lows, lower highs, really sluggish, 5 days down, but not really going too far. It could easily break back up again. So we need to see more movement in the dollar to really to add to further analysis on where the dollar is headed. It does look like it's going lower, obviously, but anything could happen here. Okay, so just keep that in mind. Here's the transports. Now, I showed that picture of the transports. Every time it made a new high, it sold off. New high, sold off. New high, sold off. Again, new high, sold off. Third day yesterday from Thursday, making a new all-time high. Friday, and then Monday put in a doji. So we have a long-legged doji indecision. So we'll see if it breaks above it or below it, and that's going to be the deciding factor. So today I'd be watching what the transports are doing. Definitely the leader here definitely plays a leadership role. But the transports still okay. Obviously, still making higher highs and higher lows, but starting to falter here, and that's something that we're going to be watching in the coming sessions. But again, we have this risk event that are coming. The FOMC and of course the non-farm payrolls will trump the charts. ES 1 hour, we have a big bearish rising wedge. We broke that wedge. We held that 1845-ish. We had that cluster, Fibonacci cluster, held it to a T. And again, we have the 1272 extension up here, holding right now. But if we break this extension, we can easily get back up to the 1920. Your first target will be that 1892, 1900, and then, of course, the 1919, 1920 area. So there are some targets above if we do decide to break back above it. And in this case, this nutty market could do really, I wouldn't doubt it at all. Next area would be the IWMs. But if you see what's happening, you see what I'm presenting to you this morning, we have very large amount of red flags all over. I could continue, but the video, it would be 2 hours long. You have the lower lows and lower highs in the IWN. Another one of our leaders, Q's breaking down, our leaders breaking down. And the only thing that's that held this, that I believe in the last 2 days, was Apple. And I know it sounds ridiculous, and I have no idea why other market participants think that Apple is the sole leader now of this market. It's just insane. It's one stock. It's ridiculous. Once it gets, and part of the reason why they have the 7-to-1 split is I believe that Apple's going to go into the Dow. That's a possibility. There are rumors out there, and it makes a lot of sense. 7-to-1, you divide that, it's around $81. That's the norm of all the other stocks that are out there. Once it goes, if it does go into the Dow, that stock is dead money. And you can see it clearly, like Apple, and Intel, and just like the stocks that we see over there. But anyway, just that's just an example, and it's just a rumor, by the way. But it just that's, to me, it's just total craziness that one stock is going to hold up the whole market. It's insane. But the market is insane right now, and that's what we have to deal with. That's what we're dealt with. And the market runs in cycles. Remember, you get easy and you make a lot of money, and then the markets get difficult. So when that difficult time period, you need to adjust and adapt and reduce your share size, reduce your risk, so you're not getting clobbered. When the market gets easy again, you're back in track again. So that's what we really need to understand as traders and investors. All right, IWM, back to the charts. We're at the 200. I see a lot of stocks that are at the 200. Now, that could do one of two things. It's going to either buoy the stock and bounce from the 200 or break down below. And if we break down below and we start separating from the 200, I don't mean just one day like we did here and here, and then we bounce back up. If we break below it, you'll see more selling as fund managers start to reallocate their portfolio. Q, same thing. Just terrible price action. You can see this here. Lower lows, bear flag, bear flag, bear flag, bear flag. And then we broke back down again, long-legged doji. So we'll see what happens here with the Qs as well. But you could see another one of our leaders really not leading here. Okay. And lastly is the euro dollar, which I like to show the euro dollar. And to me, we get that weakness in the dollar. I think the euro is going to hit that 1272 extension. I had a couple of emails asking about a euro dollar to show that chart. So here you go. Hope it helps. And again, guys, we got FOMC for 2 days, today and tomorrow. They come out with their statement tomorrow. And then, of course, we have non-farm payroll numbers come out on Friday at 8:30. So definitely use caution here. There's a few sectors that I continue to like, that continue to work. Is going to be energy. I definitely like the energy sector. Keep an eye on the drillers, like I mentioned yesterday. They didn't do too much yesterday. That's why I'm not showing to you. I just want to keep it short and sweet, and just get the most important thing out to you during these videos. Okay? Have a great day, and we'll speak to you tomorrow. Take care.